Welcome back to Saving Sense 106, your go-to channel for everything finance and investment. Today, we're diving into the exciting yet volatile world of cryptocurrency investing. Buckle up as we explore the risks and rewards that come with this digital gold rush. Hey everyone! I'm Professional, and in today's video, we're going to unravel the complexities of cryptocurrency investing. Whether you're a seasoned investor or just curious about the crypto craze, this video is for you. Let's get started. Section 1. What is cryptocurrency? First, let's quickly cover what cryptocurrency is. Cryptocurrencies are digital or virtual currencies that use cryptography for security. Most operate on decentralized networks based on blockchain technology. Think of it as a digital ledger that records transactions across many computers. The blockchain ensures transparency and security, making it difficult for any single entity to control or manipulate the system. Section 2. The rewards of cryptocurrency investing. Now, let's talk about the rewards. Cryptocurrency investing has made headlines for creating overnight millionaires. Here are some of the key benefits. Important points. 1. High potential returns. Cryptocurrencies like Bitcoin and Ethereum have seen massive growth over the years, offering significant returns on investment. 2. Decentralization. Being decentralized, cryptocurrencies are less prone to government interference and inflation. 3. Diversification. Adding cryptocurrencies to your portfolio can diversify your investments and potentially increase your overall returns. Section 3. The risks of cryptocurrency investing. But with great rewards come great risks. Investing in cryptocurrencies can be highly volatile and risky. Here are some of the major risks to be aware of. Bullet points appear on screen. 1. Market volatility. Crypto markets are extremely volatile. Prices can skyrocket, but they can also plummet just as quickly. 2. Regulatory risks. Governments around the world are still figuring out how to regulate cryptocurrencies, which can lead to sudden legal changes. 3. Security risks. Hacks and scams are prevalent. Without proper security measures, your investments could be at risk. 4. Lack of consumer protections. Unlike traditional investments, cryptocurrencies are not insured or protected by any central authority. Section 4. Tips for mitigating risks. So, how can you navigate these risks and invest wisely in cryptocurrencies? Here are some tips. 1. Do your research, understand the technology and the market. Follow reputable news sources and stay informed. 2. Diversify your investments. Don't put all your eggs in one basket. Diversify across different assets to manage risk. 3. Invest what you can afford to lose. Only invest money that you can afford to lose without it affecting your daily life. 4. Use secure platforms. Choose reputable exchanges and wallets. Enable two-factor authentication and other security measures. Section 5. Real-life examples and testimonials. Let's hear from some real investors about their experiences with cryptocurrency. Cryptocurrency investing can be both thrilling and daunting. By understanding the risks and rewards, you can make informed decisions and potentially reap the benefits of this innovative market. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss an update. Thanks for watching Saving Sense 106, and we'll see you in the next video. Stay informed, stay invested, and remember, always do your own research. Happy investing!